Hi, I'm Jeff Lovell, a staff accountant with AA Accounting, and today I want to talk about what to do if you can't pay your tax bill. The first option is that you can pay by credit card. The credit card payment can be processed through any of the agents that you see on the screen at their website. The IRS accepts Visa, MasterCard, Discover, and American Express. However, there is likely to be a convenience fee charge, which can be anywhere from typically $20 to $40. Plus, you have to pay interest on the charge if you don't pay it off within the month. So you got to weigh the benefits of doing that versus setting up an installment with the IRS. Another option is that if you can pay your balance within 4 months, you can simply set up an online payment with the IRS either at their website or through eftps.gov, and then you don't have to do an installment agreement. If you're unable to pay your tax bill within 4 months, you can request an installment agreement be set up with the IRS by filing Form 9465. A request for a tax debt under $10,000 to be paid off within 3 years is guaranteed by law to be accepted by the IRS. If you owe between $10,000 and $50,000, the IRS is highly likely to accept your installment agreement provided that the balance will be paid off within 6 years. You do have to continue to make estimated tax payments for the current year in order to stay in good standing with the IRS. If you owe more than $50,000, you must attach Form 433F to your Form 9465. This is also true if your balance due is over $25,000 and you don't agree to set up payments through an electronic fund transfer. The Form 433F is a highly detailed form giving the IRS a snapshot of your net worth and monthly cash flow, which includes listing all of your assets, the balances on your bank loans for your car and house, your credit card bill balance due, and a list of all of your taxable and non-taxable income and monthly expenses. An alternative to the installment agreement is to file for an offer in compromise. This is based on the idea of doubt as to collectability. In other words, the IRS is not likely to be able to collect the total tax debt within the 10 years it has to collect it based on your financial situation. To apply, there's a non-refundable fee of $186, which is only waived in cases of poverty. And there are two payment options. You can either put 20% down and then pay the balance over 5 or fewer months, or you can pay monthly. If you choose to pay monthly, you must make payments while the IRS considers your offer in compromise. The only exception to this is if you complete a low income certification. If the IRS doesn't get back to you within 2 years, the offer in compromise is automatically accepted. And you must stay current on all of your payments to the IRS for 5 years, or they can rescind the agreement and attempt to collect the amount that they previously waived. The last option is an extension of time to pay. You file Form 1127, which requests 6 additional months of time to pay. If accepted, this would waive any late payment penalties. It's important to distinguish this from the 6-month extension of time to file that people often file in order to get 6 months extra to file their return. You must show on the form that you cannot afford to pay the taxes without either selling assets like, say, your car or your house, or incurring an undue financial hardship, and the form must be filed by April 15th. At AA Accounting, we're here year-round to assist you with your tax issues. Call us today to set up an appointment to discuss your tax situation with one of our tax experts. We can help.